So today we were supposed to start on manufacturing. Sure. So under manufacturing, write something and you say, right there and say, these are accounts, manufacturing accounts, these are accounts which are prepared, by the entities, which engages in manufacturing stock production activities. Engages in production stock manufacturing activities. Full stop. Hyphen. The main aim of preparing a manufacturing account. The main aim of preparing a manufacturing account. Main aim of preparing a manufacturing account is to determine the production costs, stock manufacturing costs. Production stock manufacturing costs. Production stock manufacturing costs. Full stop. This is determined by preparing a manufacturing account. This is determined by preparing a manufacturing account as follows. By preparing a manufacturing account as follows. So I have this format. RM is the raw materials. You will proceed the other side. Down there, you say work in progress represents the value of work that remained incomplete. The value of work that remained incomplete at the end of the reporting period. At the end of the reporting period. Full stop. Subtopic, unrealized profits. Unrealized profits. Unrealized profits. Then you say, this arises when goods that have been transferred from the factory to the warehouse at a profit, from the factory to the warehouse at a profit, remained unsold at the end of the reporting period. Full stop. Another effect, the unrealized profit, unsold, yes, I use one, unsold. Another effect, the unrealized profit should be recognized. The unrealized profit should be recognized as an expense in the profit stock loss account. Should be recognized in the profit stock loss account. Full stop. So I want us to understand this concept very well so that we don't get confused. In manufacturing, we have the factory, we have warehouse. So goods are manufactured in the factory, then transferred to the warehouse. So factory is where we determine the production costs. Then we add profit to the production cost so that they are going to be sold at warehouse at cost plus what? Profit. So in the question, you will find two elements. You will find the elements of the factory and the elements of the administrative. So administrative does not go to the factory. Things like salaries, those salaries are to the staff. Staff are on the other side. So you will, before preparing the profit account, you'll be expected to prepare the production account, which is the manufacturing account, in order to determine the cost of production. Then you proceed now to prepare the Then something you need to know, the stock, inventory, you will have three of them. That is the raw materials, you will have finished goods, and you will have work in what? Progress. So raw materials is factored for in the factory, work in progress also in the factory, finished goods is factored in the profit account. Are we together? Yes, let's do one question. I want you to go to last sitting. Nimeona swali question 3. I want us to go to August 2022, question 3. So read that question. Go through the question. Go through the question. So mmesoma. Let's read together. Mmesoma. Let's read together. Maji Matamu Limited is a company that manufactures tamu juice. On 1st January 2021, 100,000 liters of tamu juice were in stock. During the year ended 31st December 2021, the company manufactured 366,000 liters of juice. Okay. How many juice were there at the beginning? And then the company manufactured 366 liters of juice. The company sold 400,000 liters of juice at a price of 600 per liter. The following trial balance was extracted from the books of the company for the year: 240,000 ordinary shares, retained earnings, factory land and buildings at cost, which land was 11, plant and machinery at cost. Now what is that? The factory at cost 27, freehold land and building. There's a problem there, but I've seen freehold land and building at cost is 22,700, but land is 11. Then weka hiyo kitu alafu enter ingie chini. Land and machinery at cost is 40,50. Sawa? Umeelewa? Unajua umeshikanisha. Freehold land and buildings at cost is 22,700, but land is how much? 11. Then tungekuwa kwa computer tunaweka unapo bracket ya 11 imeishia. Tungeweka kasa hapo tuweke enter hiyo drop chini. Land and machinery at cost is how much? 35. Umeelewa? Yes. Motor vehicle is 40,50. Accumulated depreciation, as you guys can see. Inventories on 1st January, raw materials, work in progress, finished goods. Purchases of raw materials, material factory, purchases of raw materials is 50. Then, now here there is a problem. Now this problem, if I'm not keen, we are going to die here. Kuna mtu anataka tofauti. Or you can access through hapa ile unaangalia. Purchases of raw materials is 50. I just want to ask, but can I assume really? Your 276,381 is what? Purchases cannot be on the credit side. Oh, so inafaa irudi huku, si ndio? It should be this side. But hiyo trial balance itakuwa sawa kweli? No. Iko hivi. Mimi ni mwalimu. It should be this way. Iko hivi. Purchases is 166, 101. So iko hivi. Purchases stroke sales. 166, 101. Then sales is the one which is 276, 381. If you observe it keenly, unaona hapo wameandika finished goods. Wameandika finished goods sales. So sales inafaa ikuwe hapa mbele ya purchases. So purchases hiyo 166 iende juu kidogo. Yes, ikuwe purchases. Then sales is the one on the credit side. Mami tunaelewa? Sales is the one on the credit side. So it means office salaries. Hapa tutatoboa kweli na hizo vitu. Hebu mzimatch. Me am now getting tired. Because tukichaza itatuletea issue. Bank, office salaries, but we can. Office salaries, what if office salaries becomes 3810? So office salaries 3810, then factory expenses, I'm just trying 1250. Then office expenses 1349. Then doubtful debts to be doubtful debts is 380. Then accounts receivable 53,840. Then accounts payable 4320. Iko accounts receivables, naona hapo. Debts, accounts receivables.
13.9.
Hapa tumechanganyishwa, si ndio? We dropped that question for another question, but I really wanted us to do it. Unaweza pata online? I really wanted something to engage me. Unajua hizo zingine nimefanya before. I wanted something new. See. But tunaweza ipanga ingiane. Hebu let's do this. Let's do this. Nataka tuipange. Wewe jaribu kuangalia. Panga. Tupange hivi. Purchases tumepea hiyo online. Purchases is this, sales is this. Then factory wages. Factory wages 3810. Sindio? 3810. Office salaries. Office salaries. How much? 1250. Factory expenses. So factory expenses. Oh, sawa. Thank you. Someone has sent us in the group. Kuna mtu ametumia kwa group. Hebu tuingie kwa group. Thank you. Someone has shared to us in the group instead of struggling here with bad things. Hebu mfungue hiyo group so that we don't struggle. Question? 3. Yes, this one. I think this one is okay. So naona sales ni 276. Ngoja tutumie hii yake sasa. Then purchases new. Factory wages 3810. Office salaries 1250. Factory expenses 13490. Allowance for doubtful debts 380. Accounts receivable 5340. Accounts payable 4320. Then bank is on the credit 240. So it's out. Inventories as at 31st December 2021 were valued as follows. So raw materials, work in progress, finished goods. The allowance for doubtful debts is to be maintained at 5% of the receivables. As at 31st December 2021, accrued factory expenses amounted to 125, including office expenses of 75, and prepaid factory expenses amounted to 12, including office rent and rates of 7. Depreciation is to be provided as your eyes can be able to see there. The inventory of finished goods of Tamu Juice was valued at factory cost. The directors of Majimatamu decided to transfer all the Tamu Juice manufactured to the warehouse at a markup of 10% from 1st January 2021. The directors proposed a dividend of 10 shillings per share. Required manufacturing and statement of profit or loss, then statement of financial position. So I want us to tackle it. So right there, they are calling themselves who? manufacturing. Shillings are in? 8,000 or millions? So when they put it like that, when it is manufacturing and statement of profit or loss, you start first of all with what? Manufacturing. Then once you are done with manufacturing, is when you go to the statement of profit stock loss. Alright, so direct material. Direct material costs. So we start with the direct material costs. So under direct material costs, we start with opening raw materials. Opening raw materials. So opening, check trial balance, opening raw materials. How much? How much is the opening raw materials? It is 32. 32.80. Then you add purchases. So add purchases of raw materials. Purchases of raw materials. Purchases is how much? 166. Using it. 101. 166. 101. Then, was there carriage inwards or return outwards? We're going to come into play. So add this. Add this, you get raw materials available. Available for doing what? For production. Available for production. How much is that? 169,381. Then you less closing raw materials. So closing raw materials, that one was captured in note 1. 35 what? 35,60. So the figure you get, bring it here. You call it raw materials used in production. How much? This minus this? 165, 821. So have it there. Very good. Then you go to direct wages. Direct wages are the wages which are incurred in the factory. So I never saw the word direct, but I saw something called factory wages. Can you trace that factory wages somewhere? This 3810. Yes, it is 3810. There were no royalties. Royalties is also part of direct costs. Direct costs are those costs which can be traced to any single production unit produced, that is. So the sum of the two is called prime cost. Prime cost is the direct cost of production. So you give us here prime cost. So add the two. Add the two. The two is how much? 169. Bring factory overheads. Factory overheads. Overheads are the indirect costs. These are indirect costs of production. Indirect are costs which you cannot attach to every single unit produced. So indirect cost of production. From top, cost which relates to the factory in specific. So from top, are you seeing factory expenses? Factory expenses. But there was a note. Factory expenses which we have been given is how much in the trial balance? Factory expenses, it is 13,490. If you check in, sure, yeah, it is 13,490, but there was a note. Check note number. Note number 3. Accrued factory expenses, accrued means not yet paid, amounted to how much? 125, including office expenses of 75. Toa hiyo 75 kwa factory. So you'll take 125 minus 75, that is 50. So you add, so it is 139, it will be this way, 139,490 plus 125 minus 75, you add the accrued. You know, office should not go to the factory. No. So that's why I'm subtracting. Then it continues by saying, and hizo vitu kuangalia, umekuangalia vizuri. What is the cost? What is the factory expenses? 13,490. Oh, 13,490. So thank you. 13,490 plus, but minus 75. Then there was also a prepayment, and prepaid factory expenses amounted to 12, including office rent and rates of how much? 7. So prepayments you subtract, but now we'll subtract 12 minus what? 7. Because inside 12 there is a prepaid expense for the office. So this one will be 125 minus 75, that is 50. Then 12 minus 7 is 5. 12 minus 7 is 5. So it will be 13,490 plus 50 minus 5. What do you get? What are you getting? No. What's up? Thirteen 535. Yes. 13. Bring here. 13,535. Let's move to another expense. For the factory. So factory expenses, done office, no allowance, no nothing. So trial balance, I don't see anything. Trial balance, there is nothing. Let's go to the notes. Note 1, those are inventory. Note 2, allowance, prepaid. Note 3, we have dealt with all of it. Note 4, depreciation. So depreciation you charge on factory building, and also you charge on factory land. Those two. So depreciation, factory building. So factory building will be 2%. What was the cost of the factory building? Trace it up there. There was factory land and building at cost. So total was 22,700, but land was 11. Can you get buildings? Yes. So it is 2%. 2% in brackets, 22,700 minus 11. Because 11 is land. So that is 22,700 minus 11. What remains you multiply by 2? 234. Confirm? Slow, sleep, buddy. Then plant, factory plant, what percentage? 20. What was the cost of factory plant? plant. It was plant and machinery. Now, depreciate that one. What is the cost? 35. So 20% of 35. 7,000. Then hiyo tumemaliza. Motor vehicle usipeleke kwa factory. Motor vehicle doesn't go to the factory. So that one, keep it aside. Then note 5, the inventory of finished goods, baadaye. The directors, baadaye. Kisha. Those are the only factory expenses. Can you add? Motor vehicle indi kwa factory. Nenda kwa nini? Inaweza kimbia kwa factory. Gani? Plan ya mashina hiyo hakuna plan nyingine hapo hiyo. Hata plant usipoambiwa. Usipoambiwa plant inakuwa kwa factory. Plant hizi kwa huko hizi. Plant ni huko chini kwa factory. Hizo mashine. Big machine. Motor vehicle inaenda kwa pia leo. Sawa. Haya, so 2760. Now leave it there. Work in progress. WIP. Work in progress. Work in progress, you start with, you add opening. Kwanza lazima wamalize kazi ilibaki. Add opening work in progress, then you less closing work in progress. So opening is the one in the trial balance. raw materials in the out, no problem. Sometimes most cases are not work in progress is 11, closing 18 400. Inakuja ngapi negative? 7,400, no problem. So take for me this 169,631 plus factory overheads minus the work in progress. What you get is the manufacturing costs. What you get is the manufacturing costs. So manufacturing costs. Manufacturing costs. You get 183,000. 183,000. Then unit cost of manufacturing. So they want to take them to the warehouse to be sold. So they were taking them to warehouse at some profits. No. Check note number 6. The directors of whatever decided to transfer all the juice to the warehouse at a markup of 10%. So you say here add manufacturing. Manufacturing profit 10%. So it is 10% of 183. So that is 18,300. So transfer value means from factory to warehouse. So transfer value, how much? Okay.
201.
201. 300. Funga single line there. Single line, single bottom line. Transfer value in when you transfer. So manufacturing takes place where? In the factory. So you transfer them to warehouse. Unatoka profit. You use like a profit. So after you have closed single line, now you start profit account. So profit account, you know, combine manufacturing and statement. But if they were two separate, sometimes you will find them, manufacturing is alone, then after finishing manufacturing, required Roman 2, statement of profit loss. But here they were combined. So if they are combined, you just finish with manufacturing. Then below this line, you start now P&L. P&L starts with what? Starts with sales. So kick off with sales immediately. So sales, so we have started the profit account. We have started the profit account. How much was sales? 160. 276. 381. Less cost of sales. Less cost of sales. Cost of sales, opening inventory, Which inventory, students? What are we selling? Finished goods. So here you bring FG, finished goods. Finished goods. What was the opening finished goods? Finished goods is 50,000. Then we add, now listen to me, in normal P&L account, we start with opening inventory, then we add what? Purchases. But you see here, purchases was purchases of raw materials. Where are we selling from? Warehouse. Warehouse receives, Lulu, skiza hapa, utaniuliza where it's coming from. Warehouse receives from factory. So the transfer value from the factory becomes like a purchase in quotes to the warehouse. You know, warehouse is receiving from the factory. So warehouse received at what price? 201,300. So you replace purchases with transfer what? Value. So say here, add transfer value. Transfer value, that is 201,300. So the sum of the two is cost of goods available for what? Available for sale. Cost of goods available for sale. How much? 251,300 less closing finished goods. Closing finished goods. Closing finished goods, check note 1. At what? 33. So do that. Yeah. 218,300. So get me gross profit. Get me gross profit. So gross profit is how much? 58,081. Then you add other income. Other income which you bring here. On a manufacturing profit. You bring here manufacturing profit. Manufacturing profit. This one here. 18,300. Unajua factory na get tofauti. So in the company, that one now you see P&L. Huko unajua huko hakuna profit determination, huko ni cost. Profit so manufacturing profit is always recognized as part of other income. There is one I want us to test, the doubtful debts. How much was the doubtful debts at the beginning? Allowance for doubtful debts was created. At the end of the year, what are they saying? We make a provision at what percentage? I saw it somewhere. Where? 5. Not 2. 5% of receivables. Can you check accounts receivable? Accounts receivable is 53.40 times 5%. Can you make that provision? Copy? 53.40 by 5. 260? 267? Sure. 7, not 9. Yes. And initially, unaona ilikuwa created. So there's a decrease in provision. Decrease in provision is treated as part of other what? Income. So decrease in allowance is 380 minus 53.40 by 5%. Is a decrease of how much? 113. 113. So bring it as part of other income. So we can add even this other income, the total. Can you add? So 58 plus this plus that. $70. Less expenses. Less expenses. So expenses, let's identify them from top. From top, check in the trial balance. Are you seeing office salaries? Office salaries. How much is that? Office salaries is 1250. Then we have factory, office expenses. Office expenses. Office expenses are an issue. So office expenses here is how much? 38, 60 plus the accrued. Check note number 3. Check note 3. Accrued factory amounted to this, including office expenses of how much? 75. So add office expenses of 75. Then less, there was also prepaid factory expense amounted to this, including office rent and rates. No. Was there office rent and rates separately in the in the trial balance? If there isn't, then I adjust here. Was there rent and rates in the trial balance? No. So it falls here. How much? 7. So there was a prepayment of 7. So that is 3860 plus 75 minus 7. How much? 39? 3928. Then, after that, allowance for doubtful debts done, accounts done, bank done. Note 1, no problem. Note 2, allowance done. Note 3, done. Note 4, depreciation of motor vehicle. Depreciation of motor vehicle. 25% times. What was the cost of motor vehicles in the trial balance? 4050. So 25% of 4050. 12.5. Give us there. Then note 1, Note 5, the inventory of finished goods of Tamu, fine. The directors of Maji Batamu decided to transfer, fine. Directors proposed coming later. Now, there is something called unrealized profits. Unrealized profits, which I want us to check. I want us to check what is called unrealized what? Profits. So how about working outside? Call it unrealized profits. Unrealized profits. Realized profits. Unrealized profits. So unrealized profits, you need to be very careful to understand it. How many units were transferred? How many units were transferred from I can work with that. How many units were transferred from the factory to the warehouse? Let's check. There's somewhere they said check where the question started. Manufacturing is a company manufactures on 1st January. They had how many liters? 100,000 tukifungua. During the year ended this, the company manufactured how many? 366. It means they should be having, in total, they should be having how many? 466. Well, if 100, then during the year they manufactured how many liters? 366. So they should be having 466 liters. The company sold 400 liters of juice at a price of 600 per liter. Sour. So what we are saying is this. These people, they manufactured, during the year they manufactured how many liters? 366. And the 366 will incur a total cost of how much? 183. And 183 was having a profit of 18,300. So you say if 366 liters was having a profit of 18,300. Therefore, how many liters remained unsold? How many liters remained unsold? 66. So 66 imebaki. So I lose a 400. So during the year they manufactured this, and this had a profit of this. So what about 66 liters that is imebaki? What profit were they having? $66 by 18,300 divided by 366. I'm getting 3,300. So this profit has not been realized. Why? Because this stock has not been sold. But there's another way you can do it. Let me see if it can work. What is the closing finished goods? Closing finished goods? 33,000. Let me try to work something there. I see. This and this. Exact so profit. What about this? So I can take that away. That's so the goods which remained unsold was having a profit of how much? 33. Because 366 liters which were manufactured was transferred at a profit of 18. Now these ones remained, meaning that we have a unrealized profit of 33. That unrealized profit is expense. So under your expenses, you say unrealized profit unrealized profit. 33,000, you got 300. 300. Imeisha. It is over. Can you add? Add for me the expenses. You want to make it to ref? That's it. Why? $94. 90 point. You subtract. So subtract from the total income of 76 so that you get profit before tax. This is a company, so profit before tax. Unapata ngapi?
67, 00.
00?
67, 67.
Less corporate tax. There was no tax in this question. Sure. If there is no tax, you don't impose it. So PAT, profit after tax, 67,003.5. Then dividends, less proposed dividends. Proposed dividend, they say, which note was this? The last note. 10% per issued share. So 10% times, can you check ordinary share capital? Where the question started. Times 24,000. Are you seeing the 24? Yes. So this one comes to 2,400. Therefore, retained earnings for the year. Retained earnings is the profit after dividends.
10%
Right? 10% of 10 shillings.
10 shillings.
Yeah. Oh, 10 shillings per issued share. Wait. 10 shillings per share. So shillings 10 times the number of shares. Shares which were there, 240. And who is God is still okay. 240. 240,000 ordinary shares. Man. You know, the first item in the trial balance. 240. Monetary, per share. So you check the number of shares. So it's still okay. How we bring up? Yes. Nafanya kazi. Uko sawa? Lulu uko sawa? Haya. So retained earnings for the year 67,003.5 minus 24. Mnapata ngapi? 60. You add retained earnings brought down. So can you check the retained earnings which was in the books? How much was the retained earnings in the trial balance? 2,000. Yeah, second from top, 3,000. So you close it by saying retained earnings carried down. That will be 67. Yes. That road is noticed.
Yes.
How are you feeling? Are you feeling fine? Thank you. How are you feeling? Tired. Hey, tired and then a balance sheet. Alright, so let's go to the statement of financial position. So statement of financial position, Naomi, unaleta yote, whether factory, whether what. So, alright, so right here, Lulu, why are you laughing at Naomi? Unaona mchoka zaidi kushinda? Alright, so we start. That's assets data to it, yeah, non-current. So non-current assets. Non-current assets. Now, he's feeling fine. Which feeling is that? I am to other non-current. How many like that? This one is like that. But you have understood how the dangerous for human being. So non-current assets. We have factory, land, and buildings. Factory, land, and buildings. Total was how much? 22 minus accumulated depreciation on buildings. What was the accumulated depreciation on the buildings? 76. And this year, how much did you charge depreciation buildings in your, that was manufacturing, check manufacturing. You charge 234? Yes. So can you adjust? Copy? 14,786. Then that is factory building, land and whatever. The next one was which one? Land and machinery. Land and machinery. The cost was how much? 35,000. Accumulated 2930. During this year, 7,000. Give me the book value now. $25. Then we had motor vehicles. Sure. Motor vehicles cost 4050. Accumulated 950. This year, check P&L. Motor vehicle is in the P&L. 1012.5. Give us that value. So 2087 point. Can you add the 3? Mmekuwa wanafunzi wazuri. So nasikia hata zinakuja. 40? 41? 543? 943.5. So let's go to current assets. Units wali ukiwacha. Connect next time ni shida. So current assets. Current assets. Inventory. So inventory, add all of them. Raw materials, work in progress, finished goods at the end. So check the closing. Check the closing. Closing. Closing, Nick. Raw materials as what?
2060.
Plus minus. Unaona unrealized profit. So that unrealized profit was in the stock. So kuna stock iko na profit. We don't record stock at profit. So you subtract the unrealized profit, which was at what? 33. Please indicate in your book unrealized profit. 51, 660. Receivables. Receivables. What was the value of receivables? Receivables, account receivable was 53.40. But at the end of the year, we were told to make a provision for doubtful debts of 5%. So either you subtract or you just multiply by 95%. Receivables part of 153.40 with the trial balance. You've seen that? You know, at the end of the year, that not 3, eh? No, 3 or 2, not 2. Allowance for doubtful debts is maintained at 5% of the accounts receivable. So it means 5% are being suspected they might not pay. So it means the remaining, yeah, you take 95%, the remaining. So take 95% of 53.40 for those who are likely to pay. How much? 50.73. Then we had bank, but bank is on the credit side. Sure. Yes, the last item in the trial balance. So that is an overdraft if it appears on the credit. Yeah, bank is appearing on the credit side. So, the 240, so that is an overdraft liability. Ignore. There were some prepayments. There was a prepayment in note number 3. Prepaid factory expenses amounted to 12, including. So already 12 include the 7. So total prepayment is 12. There is nothing. Can you add? No? What's up? Ndio separate. Hii ilikuwa ndani ya factory. Wakasema include 7 ya office. So the office inafanya ile pia mbele. So we are subtracting from there yote. Na hii unaleta kiwango. Umeelewa? So that one comes to how much? Current assets? 50? 56. This one, this is the 3.
Yeah.
When 5 number. 56, 745. So total assets. Total assets will be how much? Add the 2. Add plus 41, 9, 40, whatever. Okay. Equity and liabilities. Equity and liabilities. Ordinary share capital. Ordinary share capital. So ordinary share capital, how much the first item? 20? 324? Yes. Retained earnings. Retained earnings. Give me the retained earnings current down. The final figure in your P&L. 67? 603.5. There is no any other equity component. So can you add the 2? Add the 2. What unasoma? Really? If you don't read, you just have another solution. 91, 603.5. Current liabilities, there was no loan here. So we go to current liabilities, payables. Payables as usual. Payables was how much? Check it on the credit side. Payables, where are you? Accounts payable, the second last. 43. 43.20. Bank overdraft. Bank overdraft. Bank overdraft is 240. Bank overdraft is 240. Then there were accruals. Accruals, check note number 3, note 3. Accrued factory expenses amounted to how much? 125. Proposed dividends. When you propose, you have not paid. You have intention to pay. So proposed div. Check, we had calculated it. It was shillings 10 per share. We got 2,400. 2,400. I'm seeing those ones. So can you add? 70. 85. Can you try to add? Can you add with that one? What's how? At what figure? 98. It means we have not messed anywhere. Total equity and what? Liabilities. Utanifanyia kwa mtihani? Good. But it's quite long, eh? So you own a company. You can also have a partnership. So Siketu tunapatana for the 2 hours. So I want us to meet to find a partnership. Then we forget about manufacturing. Next week nianze na cash flow ama partnership. Nataka tumaliza na partnership. I want us to finish with partnership. So we'll start cash flow. So tomorrow I'll give you notes. Hey, Lulu kama examiner. Usually itakuwa mzuri. Then I will leave you with 1 week for revision. So utakuwa very fresh. So partnership tutamaliza nayo. Sawa. Haya, so wacha nikuwatafutie swali, mnaweza jaribu kesho tukikuja tupitie, then wape introduction ya cash flow. Msome ndio Wednesday tukikuja tuchape swali. Saturday tumalizane na cash flow. Then Sunday next week tuanze partnership. Ndio? Partnership, Wednesday partnership, Saturday partnership. Program nini? Wait first.